It is very easy to get caught up in all those stocks with the insane passive income. However, when the market moves towards a recession, it is much safer to look towards our blue chip dividend stocks and the dividend aristocrats. Of course, the most elite of our blue chippers are the Dividend Kings. In today's video, we will look at this elite group and we will begin right now. So what exactly is a Dividend King, and what makes them so special? A Dividend King is simply a company who has managed to raise their dividend for 50 consecutive years. Unlike dividend aristocrats, there is no requirement for them to be in the S&P 500. However, they all are. A dividend aristocrat in America is a company that has raised their dividend for 25 years in a row and are a member of the S&P 500. In Canada, the rules are not as tough as the US. A Canadian company needs to have increased their dividends in at least 4 of the last 5 years to be added to the S&P TSX Canadian Aristocrats Index. They also need to have a market cap of at least $300 million. The Canadian list is updated regularly, and the last companies to be added to the list was in March of 2021. A year ago, AEM, BAD, CJT, CP, ECN, FN, QSR, WPM, and X became our newest dividend aristocrats. In September of 2021, CHP.UN, that's a REIT, was removed from the list. In regard to Dividend Kings, the US has almost 50 of them, which is really awesome. In Canada, though, we have one Dividend King, with another ready to join that exclusive list in the next couple of years. Needless to say, we are going to be looking at these amazing blue chip dividend companies from the US. These will be some great stocks to sit in a Wealthsimple USD RRSP account. If you do not have Wealthsimple yet, click on my link below and get it, and get 2 free stocks while you are supporting the channel at the same time. It's a win-win for both of us. We are going to be talking about American companies, but if you want to know about our Canadian Dividend King and that aristocrat in waiting, stick around as we will talk about them later in the video. We will kick this off with Coca-Cola Consolidated Incorporated, who has a ticker of COKE. They have been increasing their dividend for 59 consecutive years. This is a company I don't think there is much I can tell you that you don't already know. However, I will try. One interesting fact about Coke is that their traditional red color was due to old tax laws. Both Coke and alcohol were sold in barrels at your local store. We're talking about bottles in the barrel, not a whole barrel of Coke. Now, alcohol was taxable back then, and it's still taxable now, but Coke was not. So Coke started painting their barrels red to make it easier for the tax folk and customs and all of them to sort out which ones were taxed and which ones were not taxed. Well, that color ended up becoming a big part of their brand. Coke does not have the best dividend with a yield of 0.203%, which comes in the form of a quarterly payment of 25 cents USD. What you do get is stability, with an EPS of 20.17 and a solid PE ratio of 24.40. Also, long-term growth is another aspect of Coke. Their share price has risen from $68 to $492 over the last decade. This is a stock very safe and of the park and leave it variety. Up next, we have Cincinnati Financial Corporation with a ticker of CINF. They have been increasing their dividend for 61 consecutive years. They are in the insurance business, and they are one of the 25 largest property insurers in America. They have successfully weathered multiple recessions and a housing collapse while still raising their dividends. Their yield is 2.147% that is paid out quarterly in the amount of 63 cents USD per share. Their EPS is 18.10, and they have a PE ratio of 7.60. In addition to their dividend, they are not too shabby on the growth side. In the last year, they recorded an ROI, return on investment, of 29% as their share price rose from $106 to $138. Another name I think everyone will recognize is 3M, and they have a ticker of MMM, or Okay, that was a little dumb. They have been increasing their dividend for 63 consecutive years. Interestingly, the 3 M's comes from their initial name, which was Minnesota Mining and Manufacturing. Their yield is 4.044%, that is paid out quarterly in the amount of $1.49 USD per share. Their EPS is 10.12, and they have a PE ratio of 14.60. In terms of growth, they have not really made much of an impact in the last year, but they do achieve growth over much longer time frames. Stable and half-decent dividends is what you get when you invest in 3M. Up next, we have Emerson Electric Company with a ticker of EMR. They have been increasing their dividend for 64 consecutive years. They are a huge presence in both residential and commercial, with everything from climate technology and sewing machines to HVAC and refrigeration. Fun fact, Emerson sued NBC over a show called Heroes, as one character stuck her hand in one of their garbage disposals, and Emerson was worried that it could hurt their brand. The case was eventually settled out of court. Their yield is 2.218%, that is paid out quarterly in the amount of 51.5 cents USD per share. Their EPS is 4.58, and they have a PE ratio of 20.30. They have experienced mediocre growth over the last year, but when you look at long-term investing, their returns are much better. The next stop up as we continue sampling the Dividend Kings is Procter & Gamble Company with a ticker of PG. They have been increasing their dividend for 65 consecutive years. It goes without saying that they are easily one of the biggest manufacturers of consumer products. In fact, they have 21 brands like Tide, Pampers, and Charmin. I just want to squeeze the Charmin now, that generate $1 billion each in global sales. Their yield is 2.304%, that is paid out quarterly in the amount of 91.3 cents USD per share. Their EPS is 5.66, and they have a PE ratio of 28.0. In addition to their dividend, they are not too shabby on the growth side. In the last year, they recorded an ROI of 15.8% as their share price rose from $136 to $158. The last of the American Dividend Kings for today is American States Water Company, who has a ticker of AWR. They have been increasing their dividend for 66 consecutive years, which is the longest streak on the Kings list. They are a water and utility company based out of California, and they also have a 50-year privatization contract with the U.S. government. That alone brings a lot of stability to this company. Their yield is 1.711%, that is paid out quarterly in the amount of 36.5 cents USD per share. Their EPS is 2.55, and they have a PE ratio of 33.50. In the last year, they recorded a small amount of growth as their share price rose from $80 to $85. On the longer term, they have much better growth. But with all of the Kings, they bring stability and the proven ability to weather any financial storms on the horizon. Those are some really nice blue chip companies. However, let's look at Canada's only Dividend King. I give you Canadian Utilities with a ticker of CU. They have increased their dividend for 50 consecutive years. They are based out of Calgary, and they are a member of the ATCO group of companies. They have been a mainstay in the energy sector and have demonstrated their core values of integrity, caring, agility, and collaboration every step of the way. They do have a very nice yield of 4.53%, which is paid out quarterly as a 44.4 cent Canadian dividend. Their EPS is 1.21, and they have a PE ratio of 32.40. As for growth, their stock has risen in price from $34.47 to $39.22 over the last year for an ROI of 13.8%. They are not going to give you a ton of growth, but they will give you stability and a good dividend. I will also mention Fortis, who has a ticker of FTS. They are not yet a Dividend King, but they are next in line as their dividend raise streak is at 48 consecutive years. Fortis began in St. John's, Newfoundland, and has grown North American-wide. They have diversified well within the energy sector, including renewable initiatives. Fortis is as stable as they come and a very blue chip indeed. Their dividend yield is 3.37%, which is paid out quarterly as a 53.5-cent Canadian dividend. Their EPS is 2.62, and they have a PE ratio of 24.20. As for growth, their stock price rose from $44.68 to $63.50 over the last year for an amazing ROI of 42%. Their growth is not bad, and their dividend is solid, and one of the safest companies around for weathering the bad times. In fact, the very first stock I ever bought was Fortis. None of us really know when a recession is coming, but we can mostly all agree that it is coming eventually, whether it be sooner or later. These stocks are great stability for any time, and even more so for the shakier markets. Of course, this video can only be the beginning of your research. A financial advisor is the end. If you guys loved this video, be excited. There is way more to come. Until then, why not watch one of these videos? And before you jump into that content, just be sure to like and subscribe to support the channel. I'll see you in the next video.